Manoj Ladwa, senior trader at ETX Capital, joins us live from the trading floor. Good to see you, Manoj. Mervyn King's been promising us that inflation's going to come down, well, for months and months, if not years. Are we actually seeing that now? What are you expecting?
I am expecting the number to come back down again. We're sitting at 5% on the CPI. The RPI is a touch higher, but expecting the number to come back down to around about 4.8%. And Mervyn King and the Bank of England have played this extremely well because they did anticipate inflation moving to the upside around about this point this year. On the back of rising commodity prices, but with commodity prices looking to have topped out and starting to come back down again, inflation to come back down, starting from now and going into the first half of next year as well. And if it does start to come back down, then it allows the Bank of England a lot more leeway in order to pump more money into the UK economy and embark on another round of quantitative easing.
Now, it's very interesting what we're seeing on the markets at the moment. We talk endlessly on this programme about the European sovereign debt crisis, slowdowns in China, slowdowns in India. Looking at the gold price, that is actually falling now, well below 1,700. Now, what's that down to? Is it because the dollar's rebounding?
Well, it's certainly down to the dollar rebounding as the safe haven asset of choice. Let's not forget that gold has had a fantastic run in the last few years or so. The dollar has been absolutely decimated and is trading at very near its all-time lows, and it's bounced back quite nicely. And therefore, that appeal for gold as a safe haven asset, given the rally that it's had, doesn't seem to be that attractive at current levels. So money flows are coming out of gold and into the dollar. And it's also the case that institutions and funds that are long of other products such as sovereign bonds, if they're getting hit with margin calls, they're closing out gold positions in order to finance those margin calls. So it's a double whammy for gold. And I see lower prices yet, maybe down to $1,500 before it starts to look attractive again.
And let's talk a little bit more about the equities side of things. I've got a note here was that BP is one stock we should be watching at today.
Absolutely. BP, as we well know, very well documented, it's had a torrid time in the last couple of years with the Gulf of Mexico, and also with regards to its failed deal with the Russian outfit. But it's making moves into the Middle East. It's had to be fairly dynamic. It's pushing into Oman. Spent $700 million investing in a gas field, a natural gas field there, which should start producing in 2016. But what is also interesting for BP is that its chairman, Carl-Henrik Svanberg, has been appointed to the board over at Volvo, and that could mean that investors aren't entirely happy, and there could be a change at board level as well, which makes BP vulnerable. So it looks interesting for BP after a very long time.
It does look fascinating indeed. Can I just ask you about what you're expecting today? Looking at the futures markets, there doesn't seem to be any sort of direction in that market at all so far.
Well, absolutely. You would have thought that after yesterday's fall and the way we sold off quite rapidly into the close yesterday, we'd see a bounce today. We're not seeing that bounce, and it's because Europe is still there, ticking away in the background like a time bomb, ready to go off, and nothing has really been resolved. And until we see firm resolve coming from European ministers, unfortunately we're going to see that volatility in the market, and we could still see further downside over the next few days.
And Manoj, we're only a few days before Christmas. What's the sort of volume like now? Are people like you all sort of like already into their mince pies already?
Unfortunately not, no, we're still having to work, and volumes are still fairly robust, but you'd like to see more volume on the upside than the downside, and I feel most of the volume is now shifting to the bearish side, which doesn't bode well for a Santa rally.